Hey guys, what's going on? So I had a bit of extra time on my hands, and I know we did Aussie CAD earlier. I thought I'd just do another one. So going through the list, we'll go through Aussie Swiss. So Aussie Swiss is also an interesting one. It's similar in the sense that, it's been moving a bit corrective. It is corrective by nature, but there is still abundance of trading opportunities. Now, the only difference with Aussie Swiss compared to a varied other amount of pairs is it's not a major pair, and also it can have high spreads. So knowing that, we want to be a little bit careful when we are trading a pair like this. Now, this one's quite interesting because we actually did get a trade shape up, but even without looking at this and staying on the 4 hour, this is quite an interesting one, and I'll show you why. So if you look at it on the 4 hour, you can see that, again, we want to be marking on daily value areas, areas where price can retest and so forth. Now, if we look at price up here, okay, great. So we had this continuation, and we had a small continuation there. We had this bit of liquidity. It was then taken out, sold off, came up steep, then eventually sold off, left a little bit of liquidity there. Then we had a massive sell-off. Okay, great. So we kind of understand the picture of what happened in that sense. It does seem like price does come back to retest quite a bit. It leaves a small consolidation, sells off, comes back, retests it. So when we're then identifying price down here, from looking at it right now, it doesn't look like the best pair in the world. However, when you do look at it a bit closer, you can see, okay, great. So what do we have? Well, let's just say price was moving up. It was in this squeeze. It then had a big sell-off, had another continuation there. There was a trade here, sold off, left a bit of a break there. This was essentially retesting. It then broke above, sold off, didn't commit, then created this, retested this area here, didn't quite fill it, left a bit of a gap, but then sold off, retested the low, took out the liquidity here, and then correctively came back up, and then took out that liquidity there, and then sold off. Another interesting thing about Aussie Swiss is that we didn't actually get the cleanest of trading structures here. And knowing that, we have to also understand that we're not always going to get perfection, and we have to be able to read through price action like this. So then we look at the next bit of price action here. Price then squeezed up, gave another continuation here, broke, sold, came back, retested that area, sold off, gave another continuation, sold off, continuation, sold off. Eventually this became very corrective, left a gap, then it broke up, became corrective again, left another gap to this whole area there, and then came up, retested, took out the liquidity from that section there, but still left this overall gap. And then what happened was it came back up. It then eventually took out the liquidity from this zone here that we were looking at. It did it within the form of this overall section here was one big squeeze of itself. And now it seems like it's beginning to sell off. So if you didn't see this trade, it's not really the end of the world, to be honest. It's not the best trade in the world, but the context is there, and I think that's the most important part. So then what you can see is that little bit of liquidity there was tapped into. We then squeezed to the upside, but then within the squeeze, we started to top out, calling it the hover there. And then we had the little entry right there. And then you're basically playing that to potentially play to the downside. And that would be the trade idea. How would you still get involved on this? Well, there was various ways. And to be honest, right now, there isn't a clear opportunity in sight. But if you do get some sort of correction like that, retesting the back end of this, I think that's an exceptionally good trade, because in terms of where we're going, we've had the push, we've had the accumulation, we've basically shown that we're not moving to the upside unless we're creating something very deep and corrective and large. But with the momentum that we're getting, it's very likely that we're seeing shorts in play now. So even just staying on the 4 hour, we can see that, there was a trade here. Had you taken the trade, you'd have an optimal level of risk reward anyway. So you'd basically be in there. You could cover the high. I don't think it's necessary. I'll just cover just above. I would say around about 27, just for the sake of if price just hovered around, didn't really give the commitment that we were looking for. Don't want to be stuck in a trade during swaps. It could be 15, 20 pips, on there. I want to be able to survive that. It could even be more sometimes. So for that sake, we're running around about 1%. I'd roughly want to move to break even, but I wouldn't move to break even just yet, just because I want to see where the end of the day is closing and how this 4 hours moving forward, because if we get the correction here, for the sake of, call it around about 30-40 pips, we don't want to get tagged in and out because of swaps. But playing this run here, you've got about 4%, and then with the scaling opportunities on top of that, you've got another trade in here. If it shapes up, you might be able to get in a little bit more better positioned as well, with a little bit tighter stops. You might be able to get in with something around about, let's say around about 10 pips, adds on another 7% to your trade, and then you're walking away with over 10% on just one single trade idea. Now, the thing about this is sometimes price can be corrective on the way down, and that's usually a signal that it's not the sort of bigger players stepping in straight away, but at the same time it can still get to where it needs to get to, just not in the way that you anticipate it. And it's something that I just want to kind of outline to a lot of people, because we have this assumption in the market, especially early on, that we want to get into a trade and then we want to see the trade just commit, but it's not always the case. Sometimes it doesn't. And if I just quickly go to CAD-Gen, this is a prime example of an excellent trade, but unfortunately, had you not had the patience, you would not have survived this. And I was saying this, I think, the beginning or the end of last week, where we're talking about CAD-Gen and GA, where we had the price action around about here, and it was like, well, if you take it around about here towards the end of the week, you're moving into the week here, this trade here could easily just turn into a break even, which it did, and then you then get the re-entry over there, and then, you know, you're in the trade. But again, it's one of those ones where, you know, time and time again, the structure's there, it's very clean, it's very deliberate. It came in, did a retest to the high, created a double top, and then sold off. And then within there, you had refined entry positions in these areas as well, and within those areas there. Again, it's just one of those things where if you really understand your price action and you really understand what you're looking at, and you've taken the time out to just understand the deliberacy and the consistent patterns within the trading patterns, but also within the nature of each and every instrument, that gives you that additional edge on top of everything and helps you read through the price action really quickly, become a fast thinker, and essentially you're able to take action when you need to take action, and you will have less hesitation in the markets. Doesn't necessarily mean you need to be shooting out loads of trades. It just means that you have the ability and the knowledge to be selective and take high quality, good trades. But again, looking at Aussie Swiss, you know, again, it's one where we're not going to see loads and loads of trades, because it can be corrective, so it can build up a lot of liquidity to eventually tap into these value areas. And even when they do tap into the value areas, they don't always commit straight away, as we've seen in multiple areas here. For example, we squeezed into it and then we hovered there for at least a day or a day and a half, and then we sold off. Same thing could happen in these areas where we hovered in this area, we were in this area for maybe about a day, and then we sold off, still technically within that region, and we never committed. And then from, you know, Monday till, you know, Thursday, we had to wait for the commitment. So another thing where, you know, trading with prop firms or low leverage, a lot of the time people don't want to be leaving too much margin inside an instrument that could move very slowly or sideways for a long period of time, because they feel like that capital could be better put into another instrument. And I understand that sometimes, but when you're taking a trade on Aussie Swiss or, you know, Bitcoin or whatever it is, and it is using a large amount of your margin, you have to accept that when you take the trade. You can't just enter the trade, exit the trade, and then jump onto another trade. Like, these are things that kind of work against you, because you're taking a trade, it's then playing in your favor, but it's not moving in the time frame that you're looking at, and then you're making an emotional decision based on how the market is moving somewhere else, and then you're reacting to that. Whereas the whole time you were correct, you did your work, you did your preparation, and you could have walked away with good money. Like a prime example is, let's just say this area of liquidity where we tapped into it. You know, even if you took a trade there or even a trade in these areas, you know, with all of them in mind, and we'll just summarize that. I'll put a bit of a larger stop on it, so I've got about 30 on this one, 30 there, and then probably about 30 again, 35. You know, again, if you're taking a trade here, it's around about Tuesday, the 20th May, and then probably, yeah, you would have probably walked away with, you know, about percent, if that, maybe came in, squeezed. I don't think you would have taken the trade up here, but let's just say for argument's sake, the trade was perfect, had everything you needed, and we took it on the pin bar there, and then price dropped off. You got about 2.5, and then to this area here, I think you'd probably be exiting the market around about 4%. And then over here, same situation, you'd be exiting the market around about, probably around about those areas there, so we're at 3.5. And then if we just summarize the amount of time that would have taken, so over here you would have entered the market, despite the fact that you would have waited for this for a decent amount of time, because you wouldn't have just seen it and jumped on the trade. So you would have been in this trade for about 6 days. 6 days on that trade. This one over here you'd be in for about two days roughly, and then over here you'd be in for around about 6 days as well. So, and a weekend added in there as well. So just something to kind of bear in mind, like these trades made money, but they required a large amount of patience and just waiting really. And obviously I'm just pointing out the trades that played out. Obviously we're not talking about the trades that you would have potentially taken a break even, taken a loss, and how that would have played on your mindset. So these are things that you have to also consider when you are trading in the markets, because you're not always going to be catching the perfect trade. Sometimes you can catch the perfect trade and it still may not play out. Like this trade over here, I don't think it has much reason to not play out, but it can not play out. That's the thing about it, right? This might just, for some reason, come back up, and then it ends up doing something a little bit like that, and then it starts going like this, and then it sells off, and then suddenly you're like, what happened? Well, you lost a bit of patience there. You know, entering a trade here, I would probably just leave my stops up there. Even though you'd have the eagerness to want to just move to break even, I don't see it necessary, because you're basically playing this being the liquidity area, that being the liquidity being taken out here, this being the squeeze into it, this being the accumulation for the short, and you're basically playing the short. So it's like, by me being too aggressive, that's me going against the actual trade thesis. The only time I would really be looking to get out of this is if this came up and then came back down and then just hovered around and it became something like that. Then I would kind of just consider like, okay, fine, you know what, this could still be a part of a squeeze. This becomes a middle section. This then comes up, taps into maybe even liquidity in these areas, and then from there we could potentially see it just sell off for some reason. So again, right now I think it's just premature. We've just got what we wanted, so there's no point second guessing yourself. Hold that bias, hold that trade idea, and stick with it and just go with it. And I think those are the things that make people money. The thing that doesn't make people money as well, actually, I wanted to just point out, is sometimes people will miss the trade, and I've seen this quite a lot, is they'll miss the trade and then they'll just think, okay, you know what, I missed it, so I'll just take the trade now. And then what they'll do is they'll just pop it on, but they're popping it on in this areas, which is not good, because they're popping it on here and being like, okay, well, it's kind of as if I was in the trade. But the difference is here now you're trading for a 2-to-1. Over here, I was basically trading for a 7-to-1, let's say. And then the fine line difference is 5% there, but also at the same time, I can't manage it, or I've got nowhere to manage it into. By the time I've taken this trade here, for me to get to 1%, I have to be all the way down here. So I could sit in drawdown for a large amount of time, as well as mentioning that margin situation, and you're walking away with 2% at the end of it. Maybe it could drop off and it turns into 4%, but in comparison to what we were actually looking at, 4% in comparison to 14%, 2% in comparison to 7%, you're better off waiting for the optimal entries, because at the end of the day, you're getting the same trading protection, but you're getting a better risk reward, and you can get in and out of your trade a lot better. For example, if this ran for, let's say, 5%, and I took the optimal entry there at the top, the risk entry, I could close that and take that and put it into another trade, or 3, 4, 5 other trades. Not at the same time, but if I took it at the entry now, like where price is right now, in order for me to get to 2%, it doesn't really do much for me. I'll be honest with you. Yeah, 2% is great, it's good, but in the same time, the cost of, what I'm risking it on, it's not worth it. So yeah, just a quick short video. I don't think there was a lot to go over on Aussie Swiss. If there was anything that you wanted to kind of point out, or you wanted to ask me a question on it, you can always drop me a DM or drop a comment below. Don't forget to like and subscribe, and yeah, catch you guys in the next video.